Morning and welcome to the room. Trend Trade Titan. I like that. That's my next tattoo. What's going on, Dono? I'm sure it's Don O, but I like Dono. That sounds pretty cool. Welcome to the room, guys. It's great to have you. Reminder that this is an educational room. We will find ourselves in front of a live market. You'll probably even see me pull the trigger. Hey, what's up, Dr. Gaia? We've got another Grand Rising, people. I like that. Andy V, we found your people. Everything that I do in this room is educational. Everything I do in this room is trying to teach you to read indicators, to recognize advantages, to be able to turn those advantages into trades, guys. Everything that I do in this room is designed to help you make informed decisions on how you're going to approach the market. One of the informed decisions you can make is choosing not to trade during high impact news. It is a situation that can create spikes, jumps, bumps, flips, trips, all the things that mess up trading, disrupting patterns. And trading really it's about patterns. That's all it is. Trades with the successful traders, let me throw that in. With all of the successful traders that I've worked with, I see the absolute least amount of variation. With the people that I work with that are the most consistent, I see the least amount of variation. The people that I work with that are finding the results that they want, I see the least amount of variation. You may love variation, that is your right. But if you're not finding the success that you want yet, if you are not in a position, Friday's going to be a hoot. If you're not in a position where you're winning more than you're losing yet, you may choose, should you decide it is advantageous for your current situation, you may choose to latch on to a very simple plan. You may choose to stop chasing all of the variations that put you in the market without an edge. You may make the decision to focus on one thing that you can prove wins more than it loses. So every time you take that trade, you take it with confidence, even though you won't know what the result's going to be. We're going to talk about both TradingView as well as NinjaTrader today. These are two platforms. They are different approaches to trading the market. We're also going to look at, on the NinjaTrader, the lookalike as well. But the plan for the lookalike that some of you have started trading and TradingView, it's exactly the same, even though they look a little different. And NinjaTrader will be separate completely. So we're going to start on TradingView. I'm going to go through it. If you have questions, I encourage you to interrupt me. If you do not interrupt me, I am going to get into a little bit of a groove. And the more time we have after the basic lessons, guys, the more time we'll be able to watch live markets to talk about what we see and make it seem a little more real for you. Learning to read your charts. This is the goal. This is the first goal. I want to be a day trader. No, you don't. You want to be a chart reader. You want to be somebody that can look at your charts and say, dag nabbit, there's a pattern that I can prove wins more than it loses. There's a pattern that if I take it 10 times, it typically wins 7. There's a pattern I'm going to latch onto because it's been proven by me through testing to win more than it loses. It only takes 3 rules and 2 charts to do it. That's it. You are an information analyst. Amen. Advantages become your trade, guys. Chart reading is about 90% of your day. Waiting for rules to be met is about 90% of your day. Doing nothing is about 90% of your day. But you're going to understand through your chart reading, both platforms, guys, where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These concepts, likely to continue, that's where your entries come from. Where you have defined a trend, waited for a fight, pinpoint where that fight's most likely to be lost, and chosen to enter the market. Where the market is likely to go is using these key areas on either platform, giving you the ability to know an area where with the advantages in play, targets make sense, and where the market is likely to stop. We call these termination conditions, and they're called termination conditions because they have the ability to terminate a trend. And if you're a trend trader and the trend terminates, that's very often bad news for you. So you're going to see these and recognize these, and hopefully one day learn to respect them. Learn the simple rules first, guys. This is your path to getting where you want to be ASAP. Learn the simple rules first. There are a million ways to trade the software. There are a million ways to make it work for you. In the very beginning, what I do in this room is I hand you the path of least resistance to get to results the absolute fastest, because most of us want to be at the finish line before we tie our shoes. So if you really want to get there quick, guys, practice and post. Post in the room. Every time you take a trade, post in the room. It's a private session with me. I'll click on the link that you provide. We'll open things up, and then I'm going to read what you said. Waited for yellow 1-to-1, price to pass. Fight, waited for a close below the small triggers, and making money with the trend trade. Nicely done, Adriana. This is the trend trade that we're about to talk about. Adriana posted in the room to make sure that she's good. So Adriana, are you with me in here? I know you got to go to work at some point. Guys, when you post in my room, we're going to talk about some things. So Adriana, I want you to get in this habit as you're learning this. Triggers down means that we're in a downtrend. Room to targets. That's the most important phrase. I've got room from wherever I take this trade before I hit something. And then one of the things you can do, instead of fight and waited for a bar to close, try this. Pull back to an area, because that's the most important part. The fight is great, but if the fight doesn't go to an area, Adriana, the rules just aren't met. So make sure that you're focused on your trades coming from an area. Does that make sense? And guys, the language that you put on your charts lets me know how you're reading your charts, what you're looking for, why you're looking for it. And then what happens is I make sure that you're reading them correctly. I make sure that you're not omitting one of the steps or that you're fighting something that doesn't need to be fought. And Adriana, really nice job on this one. Little late on the entry. That's okay. That's your right. That's it. And Adriana, it looks like this trend trade agrees with you. It looks like looking for one thing, one set of rules, one entry seems to be working just fine so far. Great job. And guys, every time you post in my room, why late? Because Adriana, boom, 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 boom. Let's make it big so we can see. There's your pullback. There's your close below right here. And then what happened is I guess you got it on the second pullback. Does that make sense? There's your first one. And then it comes right back to the area. And it looks like you just got it on the second pullback. So either way, good job. Does that make sense? That was your first fight. That was your down bar that didn't close below. There's the one that did. And that was pretty far gone. So you actually just kind of caught it on the second run. Really nicely done. But guys, we'll do that every time. Hey, Mark, this is what I saw. This is what I did. This is where I did it. How'd I do? You'll get everything that I have in my brain to help you do it better. The second thing is simple. I've been doing this for a long time now. And one of the things that I have found is that everybody loves to start simple. They like to keep it focused. They're looking for that thing that creates an edge. And once they start finding success with simplicity, they are just adamant about looking for every tick in the market. And that's cool. That's your right. I'm okay with that. But if you're not finding the success yet, guys, there is a path. Simplicity. Learn the looks. Learn the pattern. It's just a pattern. So on TradingView, it's a trend. It's a fight. It's a resumption. It's the exact same pattern every time. Learn that pattern so that it becomes easy. Learn that pattern so you know right where your trades are coming from. Learn that pattern so that you don't fight things that could mess up your good time. And learning that pattern, one of the easy ways to do it is use a spreadsheet. So I've already posted in the room a plan for TradingView. It's a stepping stone. It's the beginning. It's not the only thing you can do with the software. I am not here to be the trade police. I'm here to teach you the path of least resistance. There's only 2 trades on it. Both trades have checklists, tell you where to put your stops, pictures of what it looks like, where you find the rules, guys. The trades on this plan are designed to optimize your chances of success. To give you the highest chance of success as you get familiar with the software. You will write your own plan eventually, guys. Some of you will take the core concepts and turn them into different trades. Some of you will just go a completely different direction with those core concepts, and there is no wrong way to do it. As long as you are trading patterns that you can prove win more than they lose. And then the second thing is use a spreadsheet. I've given you pictures of the 2 trades, what they look like, some ideas on management, when not to trade. There's a place for you to build your plan, and there's even a place for you to track your progress. So every time you drop a trade in the room and you're telling me what you see, I'm going to tell you what I see. Guys, put that feedback in there. Go back and re-annotate your charts. And what'll happen is if you're really using these trade tracking sheets as intended, you'll go back every morning and you'll just ask yourself what worked, and you'll ask yourself what didn't work. And what didn't work you may not see in the moment. That's why we post in the room, to get that feedback. You'll recognize that following your rules begins to feel easy and very relaxed, and you don't feel stressed out because you're like, man, I know this one wins more than it loses. And when you start taking trades that don't fit the plan, when you start just hoping things work out, you'll notice that you start moving your stops, your targets, you feel nervous, your pulse goes up. If you go back and study and do that every morning, it's going to set you up for the day, guys. It's going to accelerate the learning. It is going to get you where you want to be faster. Will you guys excuse me just one moment? I'll be back in like 1 minute. I am back. Um, so the path to getting there. Learn it, practice it, learn the looks so that it becomes easy. And again, it's just a pattern. So we're going to establish a trend. We're going to wait for a fight. And then you're going to use your rules to pinpoint right where the fight is most likely to be lost. You're going to use the rule to enter the market right there with the hope that the trend resumes. It only takes 2 charts to make it happen. There's a 15-minute chart. This is your big chart. This is your slow chart. This is like a glacier of a chart, guys. You can have 100-point bars on a 15-minute chart. It could start printing a bar. You could go make a sandwich, eat it, wash it down with a Coke, and come back, and the bar's still not done. 15 minutes is slow. So we're going to use that big slow chart to define the direction of the market. We're going to use it to define the momentum in the market. We're going to use it to define the targets that we're trading to, as well as termination conditions, reasons not to take that next trade. Most of the work gets done on the 15-minute chart. Your 1-minute chart is a smaller, faster chart. It's going to show you the immediate strength of the market. It's going to show you exactly where your entries come from, and I'm going to give you a rule to get you in so that you don't fight that immediate strength. We're going to use trigger lines on both charts. This is your large chart and your small chart. Your large chart uses only small triggers, so I guess we could just call them triggers if you wish. On the small chart, you've got small and large triggers. Now the small triggers are used to define the immediate strength. The large triggers You can use those for momentum style trades. If you choose not to be a momentum trader, you can pull them right off of your chart. Just get that distraction out of the way. We're also going to use areas. Areas all have names. These are one-to-ones. If you see a yellow or a pink set of dots, these are 100% Fibonacci alternates. If the market is going up, they can behave as resistance. In a downtrend, they behave as support. We're going to use these for targets. If you're in a trade, you see one in the distance, it's a great place to get paid. We're going to use them for termination conditions. We're going to say, I refuse to take a trade directly into one of these things. And we're also going to use them on the small chart for entry points. You're going to see divergence highs, magenta line, divergence lows. These let you know that there was a loss of momentum in the market. We're going to use these for targets, and we're going to use these for terminations, areas not to trade into. These are not used for entry. And then we're going to see outer bands and mid bands, guys. Outer bands, obviously, on the outside. These are points of exhaustion. They can create big, ugly bounces, which is why they're used for targets and terminations. But they are not consistently creating big bounces, so we don't use them for entry. The mid band is a moving average that runs through the center. If it's magenta, price is below it. It can behave as resistance. If it is green, price is above it. It may behave as support. Again, these are used for targets. These are used as termination conditions. They will also be used for entries. So when you put them all together, you're going to see them on your chart. And this is what I want you to remember. If you're a note taker, take this note, please. Any of these lines can create a bounce. Any of these lines can stop forward progress. Any of these lines can end a trend. Any of these lines can take away your advantage. Areas are bouncy. It's like take all the technical out. Areas are bouncy. So we're going to go through and we're going to find one trade. That's it. That's all we're going to focus on. Just one trade, a trend trade, which means that we must define the trend. Pretty easy. On your big slow chart, whichever direction your small triggers are moving, whether it is up or whether it is down, that's the trend you're going to follow. If you can't tell if they're flat, if there doesn't seem to be any up or down movement, but rather only lateral, left to right, guys, you don't have a trend. And you really can't trend trade if you can't define a trend. So it's okay. Let it be very decisive. And then once you establish the trend, you're going to keep your eyes on that large chart, and you're going to make sure that it's not trading directly into areas. You're going to make sure that when you define your trend and you're looking at things, that there's room to trouble, that there's room to make money, that there's nothing in the way that could create a bounce, no lines in the way. So this is what it's going to look like when there is room to trouble, and that's what it's going to look like when there's not room to trouble. I want you to just picture a brick wall. You're either 10 feet from it or 10 inches from it. Only one of them gives you a little bit of time before you break your nose. Once the large chart says that you have room, I'm kind of piecing these two together. Rule number 2 says 1 minute not trading directly into areas, which means that you also have to know where your entry comes from. So I'm going to give you a visual by showing the entry, and then we're going to piece it together with making sure that you're not trading into a line. Does everyone know the difference between trading? So let's do this. I'm going to put this guy right here. If I start here, I'm moving to that guy. If I start right here, I'm moving into that guy. Trading to something means that I have room before I get there. Trading into something means that there's very little or no room to get there. That's what we're trying to avoid. So for a long trade entry, remember, first it's a trend. This one is up. Then it's a fight. And your fight begins when the small triggers roll down. So the large chart triggers say up, the trend is up. The small chart triggers roll down. That's the beginning of the fight. And then you're just going to turn your attention lower to a mid-band, to one-to-ones, to zones if you have them, to fibs if you're on NinjaTrader. And guys, your entry is a pullback to an area. It's imperative that you learn that phrase. And then it's a close above the small triggers. So the fight is on, the area is reached, and it's 1, 2, 3, 4 minutes until you get a close above the triggers. This close above the triggers ensures that you're not fighting the immediate momentum. By not fighting the immediate momentum, the bounce from this area, the close above, is where the small chart is most likely to get back in line with the large chart trend. So your pattern is first the trend, then the fight, hoping that the trend resumes. For a short trade, the trend is down. Because the small triggers roll up, I'm looking for an area, mid-band, 1-to-1, zones if you have them, and I'm not taking an entry until price reaches that area, and I get a down bar, a reversal bar down that finishes below the small triggers. Guys, this is putting you on the other side of the immediate momentum. This is allowing you to be in a position where the market is most likely to continue down with the already prevailing trend. So when you take those entries, first it's a trend, then it's a fight, there's your close below. It's important that you have room to make money. It's important that there's not, good morning Sergio, something that could create a bounce directly in front of you. The trend is up. Well, type it in the room, brother. Pull back to the area. Close above. Is there room before I hit something bouncy? And if there is, congratulations. You have a trend trade. And that's really all there is to it. Because the small triggers roll. Yes, so because we're waiting for the close, Sergio, good question. So guys, I want you to see this. If I'm looking for a short trade and I have to wait, so check it out. Triggers are down. From here to here, I have room. The market pulled back to resistance. If I need a close below the triggers, I'm waiting for this timer to end. I'm waiting for the countdown. 7, 6, 5, 4, 3, 2, 1. If the rules are met, then I hit sell, and you'll see that the entry will almost always be, unless you catch it with the second left, it'll be on that next bar. Does that answer your question, Sergio? If you're really waiting for the close, you'll always see your entry on the next bar, because if it's on the bar that you're waiting for to close, it means that you didn't wait for the close. Ta-da! Room to targets. Is everyone good with that? Defining the trend with the large chart, making sure there's nothing in the way. It almost sounds too simple when you say it like this. And then just buy or sell a pullback in an area with a close on the weak side of the small triggers. The weak side of the small triggers is the side and the direction of your trade. And again, it looks just like this. The triggers are up, and there's nothing in the way. This is your opportunity right now. If you're having a challenge with trend direction, raise your hand. Force me to explain it again. If you're having a challenge with room to targets, raise your hand. Force me to explain it. Because once this is going on, we're done. We're done with the large chart. Don't need it. Your small chart will be trading way up here. This is where it's so important that you learn your entry rules. Entry rules say to buy a pullback, which means that the fight has got to happen if I'm following rules. And I'm going to do it in an area, which means not only does it have to push down, it's got to make it all the way down here. And once I get there, I'm not just jumping in. I'm waiting for a close above the small triggers. Guys, you will know exactly where your trade is coming from, sometimes 10 or 15 minutes before it ever gets there. You'll know exactly what has to happen before the market ever shows up at your entry spot. You just have to learn the language. The triggers are up. There's nothing above us. There's room to targets. Is everybody good with that? You guys want to do me a favor? Give me a Y in the room if that makes sense. All of my TradingView users, let me know that you're good with this. Trading into areas is the most broken rule. The most broken rule among traders because it forces you to be patient. Because the small triggers roll, my entry rules say pull back to an area. Look how far away the area is. I already know where my spot is. I know where that trade has to come from, and when the market gets there, all I'm doing is I'm waiting for a close above the small triggers. We did this one in the room. I like showing this picture because this was real time in front of all of you that were present that day. The triggers were down, and there was room to get to the next area. Because the small triggers rolled up, and really probably before they did, we collectively as a room said we need a pullback to either this zone or that mid-band. And when it gets there, we need a close below. And we had about a 9-minute wait. About 9 minutes before the entry rules were met. One of the great things about the TradingView methodology is it creates this patience, guys. There is no crazy rapid, holy shit, I hope I don't miss anything. It's every bar is a minute long. And when you get to the area, sometimes you have 2 or 3 minutes before you get a close below. It's very calming for those of you that are a little bit of adrenaline junkies. And it looks the same every time. We're going to use this picture to talk a little bit about management and what you're looking at when the rules are met, guys. And when your large chart is in an uptrend, buyers are in control. Does everyone understand the difference between buyers and sellers? Buyers make the market go up. Sellers make the market go down. So when the big chart, the slow chart, that broad stroke of a brush says, hey, guess what? We're going up. The general consensus of the market is we want to go up. There it is, buyers in control. And then there's sellers fighting. The sellers push. And it could be because the buyers jumped ship and took profits. It could be because there was $1 billion worth of sellers at that point. That doesn't matter. We just know that the push down is the sellers fighting. And guys, you will be able to see exactly where the sellers fail. I mean exactly where their fight is done. That's the low. That's the pivot low. And a pivot means the market went down and started back up. This pivot low is where the sellers couldn't get anything else done. The buyers took back over and kept going with the underlying trend. We're going to use that pivot low or pivot high where the buyers failed in a short trade or where the sellers failed in a long trade. And your initial stops will go about 4 or 5 ticks below that pivot. That's where the market should not go. That's where the sellers failed. That's where the buyers failed. And if they come back and take another run at it, guys, they're probably going to take out that pivot high. And it just results in bigger, uglier losses if you start hiding stops way off in the distance. This is pretty precise, and it will help you reduce risk. Is everybody good with that? Putting stops in the right spot. Nothing worse than getting stopped out of a trade only to see it run because you put your stop in the wrong spot. Now we're going to talk about support and resistance. Resistance, when the market is moving up, any area reaches resistance. It's like a ceiling. Short trades selling the market come from areas of resistance. When the market is trending down, areas reached are support. It's like a floor. Long trades come from areas of support. Is everybody okay with that? Give me a Y. Short trades come from resistance. Long trades come from support. This is important because you have to know how that area is behaving. When the market comes up and hits this area, that area is resistance. It could stop a market. It could create a bounce down. Areas break. This is what it looks like. If you get a full bar, the full body of the bar, all 4 corners, I don't know how else to say it, and that bar finishes and the market moves to the next bar, Because of this bar, resistance has become support, which means that if you're looking for a long trade, that's your pullback to support. The area is broken, it changes its role. Only long trades come from support. When you get a full body of a bar below support, support becomes resistance. Short trades come from resistance. These are the two most common challenges that I see with new users. I'm looking for a long trade. I'm coming from support, and I'm going to jump in when the bar closes above the area. Guys, this is an area that is still behaving as resistance. If you look at the next bar, you can see the giant spike down. This is what we call the prairie dog. And the prairie dog, if you're familiar with it, if you're not familiar with it, let's use the internet, right? Let me see if I can find my internet. A prairie dog does this. Prairie dogs are notorious for popping their heads. Just popping their heads out. Looking for danger, guys. That's a prairie dog. That is hoping to go long from an area of resistance. This produces a lot of losers for new users. Sometimes you guys will say, well, I want to go short, and when the market starts pushing and the bar's not done, I see you guys jumping in down here. Well, I got below trouble. Yeah, but you never got a full bar below trouble. And it's not uncommon to see the market spike right back up from an area of support. These are two of the biggest challenges that I see new users taking as they're waiting, because they're just tired of waiting. Prairie dogs drain accounts. And now how to annotate. So if you're brand new with me, if you're learning this, Adriana, this is what I was talking about. Every time you take a trade, as you're learning this methodology, guys, really go back and talk about what it is you're looking for and why you're looking for it. So my small triggers are down, which means that my rules say only shorts. Write it on the chart. Triggers down, only shorts. Just reaffirm what you see and what it means. I have room to targets. I have room to make money. And that's why I'm trading. I hope that's why you're trading too. And look at this. Small triggers rolled up. So I need a pullback to an area, then a down bar that closes below the small triggers with room to trouble. You have literally described the perfect entry on your chart. And if you type that out 10 to 15 times, guys, you're not going to make entry mistakes. And if you type this out 10 to 15 times, you're not going to fight the trend. And if you know you have room to trouble, you're going to learn to depend on that room to trouble to give you the ability to make money. Guys, if you present a chart in my room from TradingView, this is what I really ask of you. I don't ask a lot. Do whatever you want. But as you're learning the methodology, if you want to be held accountable to this methodology, to that KISS plan, make sure that you're typing these out. Any questions about TradingView? Oh, cute little prairie dogs. That's it. That's my whole lesson. Check it out. Triggers are up. That's an uptrend. From where I'm at, there's a little bit of room to get to trouble. But on my small chart, I don't even have the fight. I would have to wait for the triggers to roll. I would have to wait for a pullback to an area. And this is one of those times where I'm just kind of hanging out, doing nothing, sitting on my hands. And guys, that is TradingView. And if you are one of my NinjaTrader users, and we're about to go to the NinjaTrader high probability trend trade, let me close some stuff out. There is a lookalike workspace for NinjaTrader. You're going to see some people using it in the room. You don't have to. Some of you just don't want to do TradingView because you don't want something new. If you want this workspace, let me know. I'll give it to you. But the workspaces that we're going to look at for the high probability trend trade, we're going to watch the S&P, and we're going to watch crude oil over here. And we're going to do it the exact same way that we just did it on Ninja, guys. I'm going to bring up a PowerPoint. I've already provided you the PowerPoint in the room. And we're going to go through the easiest, least amount of moving parts, highest probability way to use NinjaTrader to find a high probability trend trade, giving you the ability to recognize a trend, to identify a fight, to pinpoint where the fight is most likely to be lost, and hope that the trend resumes. The way to get there is no different. Post in my room. I don't care what platform you guys are using. The people that post the most get to where they want to be the fastest. It only takes 3 rules to take this high probability trend trade, a trade that you'll be able to prove wins more than it loses. Just a heads up, on TradingView, you guys have shown me about 75% winners when you take only the trend trade. That's pretty phenomenal. When you look at the high probability trend trade on NinjaTrader, you're going to see somewhere between 70 and 80 potential. Most of you guys are showing me around 78, 80. It only takes 2 charts to prove these rules to be true. You have a large chart, it's a big slow chart, it's a broad stroke of a brush. It defines direction, momentum, areas. It leads the way. Your small chart is where you're going to see the fight, where you're going to pinpoint where it's most likely to be lost, and hopefully where you're going to see continuation. And all of that for entry happens inside of the most current bar, the first bar on the large chart. Simplicity, guys. The fewest moving parts you have, the easier it is to find success. We're going to use areas. Areas are bouncy. Areas can stop a market. I don't care how much you believe your strong triggers can break it. I don't care how much you believe that strong top or bottom demands that they let go for you. 70 to 80% of the time, trading into an area on your large chart is going to result in failure. That's it. There is no advantage trading into areas. We're also going to use triggers, small triggers and large triggers. And what you're really learning right now on NinjaTrader, guys, is to read these trigger lines, because you're going to use them to define momentum. You're going to use them to define termination conditions, knowing when you shouldn't take that next trade. And you're going to use the large triggers, the dashed lines, to define your perfect entry. Triggers show up in everything you do. So we're going to break down 3 rules. When a rule is true, you have an advantage. Rule number 1 gives you the advantage of momentum, meaning that a market is going to be difficult to stop. Rule number 2, make sure that you have a clear path, making sure that there's nothing in the way to create a bounce. Momentum and path should feel like this. Momentum and path should create this awe-inspiring confidence that you have a market with so much behind it and nothing in the way that the odds are favorable for it to continue in the direction of that trend. Rule number 3 is just defining where the market is most likely to bounce and continue in the direction of your momentum and path. So rule number 1 says large chart must have strong triggers. Strong triggers in an uptrend when the background is green means that the smalls are above the large, that there's space between the two, that the large are widening. And when you see this, the odds are favorable for the market to continue in the direction of the trend. And in a downtrend, if the background is red, the small triggers must be below the large. Space between the two, large triggers widening. That separation, no matter how large or small, lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, guys. You're going to see it in the room all day long. It's going to lead the charge. Odds favorable momentum pushes the market, can break key areas. Hell, it even covers mistakes that we make as new users. Separation is strength. That's your phrase. When the separation is gone, when the smalls work their way back inside of the large, the strength is gone. And when the strength is gone, anything can happen up or down. Separation is strength. The market pushes. Weakness, look at that. The market turns from the middle of nowhere. Separation is strength, breaks key areas. Weakness, big, ugly retracement. NinjaTrader users, give me a big old fat Y in the room if you're cool with this. Separation is strength. No separation is weakness. Only one of them provides the advantage of momentum. Only one of them has me looking for a clear path. And a clear path means that there are no termination conditions. Me too, Jeffrey Dean. Scissors make me happy. No termination conditions, no areas that may reverse the market. Guys, these termination conditions, you're going to see them long before the market gets there. You're going to know about them. Hell, if you're in a trade, they might be a target first. We want room to make money. So to define a termination condition, the first thing that happens is the people that are in control of the market push the market all the way to an area of resistance. Price reaches an area. That's the beginning of the phrase. Once price reaches the area, you ask yourself, where are my trigger lines? Not price bars. Doesn't matter what color things are. Where are those small and large triggers? And if all four of the lines, if 0 trigger lines make it above that area of resistance, that area of resistance is defined as a termination condition. And a termination condition will do one of 3 things. It will either break, and they do break. It will stop the market and reverse it completely. That makes it a strong top or a strong bottom. Or it may just set off a fight that you don't want to be a part of. So if price reaches the area and no triggers break, absolutely no trades into the area. Now, some of you will say, well, Mark, from back here, I've got room to get back to the area. That's not how it works. If price reaches an area and no triggers break, absolutely no trades into that area until one of 2 things happen. It either breaks and is no longer a concern, or the market reverses and it is no longer a concern. Does that make sense, everybody? Very often people will say, oh, but I had room to get back. That's not how it works. Because if it reverses the market, you get run over. And if it creates a big ugly bounce, you lose money. So there is no advantage trading into areas. But if they're going to break, triggers are going to tell the story. We are literally counting triggers. If price reaches a line, an area, in this case it's resistance, I say to myself out loud, where are my triggers? There are none that have made it above those lines. Absolutely no trades into the area. That's a termination condition. My advantage is gone. I'm more likely to lose than win, which means that there is no edge trading into an area. If 2 of the 4 trigger lines that we're using smash through that area with all that momentum, man, this area does have the potential to break. It's potential, and honestly, it's pretty lame potential. Not your best look. This is where we start getting excited about the potential to break. And when 3 of the 4 trigger lines get above the line, above the area, now we've got the best potential to break. But it is still potential. It's not broken. The path isn't clear. Rule number 2 is not met. The second trade on your plan takes advantage of that potential to break. There's a very specific set of rules that go with it that have you leaning on the advantage of momentum and making sure that your entry is perfect. But when all 4 trigger lines get above that area is now broken. And when that area is broken, the path is clear. And when the path is clear and you have that momentum, you are excited about looking for trades. This is the S&P. Does everybody see how Fibonacci resistance stopped the market, created a reversal, established momentum? Holy crap. Thank goodness I didn't trade into that area. Weak triggers. Look at that. Weak triggers right at resistance. Boom, down it goes. These tails that you see with all that momentum, those are potential entries. We're going to come back and look at that tail together. We're going to come back and look at this tail as well. 3 triggers through, coming through. Awesome. Have a good one, Adriana. Nice work today. So large chart leads the way. we're going to count triggers, guys. Is everybody okay with that? Has nothing to do with price bars. Has nothing to do with the color of the fib. Trigger lines will tell you whether it is a termination, has weak potential to break, good potential to break, or if that bad boy is broken. You can have a clear path from a breakout where all 4 triggers get above resistance in 1-to-1s. You can have a clear path from a reversal. When the triggers roll, the momentum is strong, there's nothing in the way. That's your look. And the easiest trades you will ever take with this software, the highest probability trades I've ever taught in this room, will have both momentum and a clear path, and you'll go to the smaller, faster chart where you will use the inner workings of that bar to pinpoint right where this tail is most likely to form by using a simple phrase. I will use a limit order to buy or sell a pullback at an area inside of triggers. Guys, this is your entry rule. I will use a limit order to buy or sell a pullback at an area inside of triggers. The phrases that you use will define the perfect trade. Separation is strength for momentum. Price reaches, no triggers, no trade. Not trading into terminations. Use a limit order to buy or sell a pullback at an area inside of triggers. When I talk about it just being patterns, when the large chart rules are met, it's time to wait for the fight. The fight begins with a reversal bar. The reversal bar signals the beginning of the pullback. It's not your entry. Trigger lines, you have 2 large trigger lines on your entry chart. One from the large chart, one from the small chart. One's not more important than the other. These trigger lines work together to define exactly where that fight is most likely to go, where the retracement is most likely to go. We could call it the retracement zone, from the high point to the low point. But trigger lines aren't bouncy. We need areas. We need fibs, midbands, or yellow 1-to-1s inside of triggers. So the market may retrace to these triggers. It's most likely to bounce from an area inside. I don't know which area it's going to be. I'm good. I'm not that good, right? So I'm going to put a limit order just above the highest point of support. And I'm going to say, because the large chart has all the momentum, because the large chart has absolutely nothing in the way, I'm not going to hope it goes lower. I'm going to get in at the absolute highest point of support inside of that area of retracement. And if the market pushes a little through it, no worries. It's still in a good spot. And if it makes it all the way to the bottom of the retracement zone, no worries. It's still in a good spot. But if they can blow 5 ticks below those triggers to the wrong side of the triggers, well, dang it, now they're where the market should not go. This is where your initial stop will be placed. This is where we say the advantage of rule number 3 is no longer in play. This is where you accept a loss and you say to yourself, man, that was a good loss. I had everything in my favor. This one just didn't work. And anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Guys, this is a cost of doing business, and small losses are a normal part of a positive equity curve. So you've got to be brave. You've got to define the trend. You've got to wait for the momentum. You've got to get that clear path. And when the fight is on, you're going to use these trigger lines to define where they're most likely to retrace. And you're going to use the areas within to define where it's most likely to bounce. And you're going to develop the courage with a little bit of study to activate your limit order just below the lowest point of resistance. You'll be willing to put your stop where the market should not go. You're going to learn to ignore every line beyond those triggers. And guys, that's your high probability trend trade. First, it's momentum. Then it's path. Then it's a pullback to an area. And it's just a pattern. And it's a repeatable pattern. And it's a testable pattern. And it looks like we may have one setting up right now with momentum and path. We may have already missed it. There's our pullback to the area inside of triggers. There's our stop where the market shouldn't go. We already hit our first target. The KISS plan says go break even after that. Second target's at $200 in the KISS plan. Oh, we made 100. We can't lose. Come on. There's your $300 trade, my friends. Everything we just talked about. Right there. If I circle the tail, guys, I'd sold damn near the high tick. How's that for fortunate? That's your KISS plan. Now here's the challenge. Here is the challenge. And guys, I get this all the time. Mark, I'm not getting the results. I'm not getting the results that I want out of this KISS plan. That's why I'm the Titan. That's how quick your chart reads will happen. So guys, this methodology right here that we just took is a methodology that typically wins, gives the potential to win. Let me do all my disclaimers. 70 to 80% of the time. Give me a why if that makes sense. This is a predictable, it is a repeatable, it is a testable pattern. If I don't have momentum, I don't get KISS plan results. If I don't have a clear path, how can I get KISS plan results? If my entry isn't definable at an area inside of triggers, I don't get KISS plan results. So guys, if you're half-assing the rules, if you are almost following the rules, don't expect the results that come from following a plan that's been proven to win more than it loses. If you are changing your management plan mid-trade, don't expect to get the same results. If you're relying on your emotion instead of your rules, guys, this is exactly as it's taught. That was the exact same entry. Strong triggers, no terminations, area for entry inside of triggers. It was the exact management. Initial stop placement where the market shouldn't go. First target's 100, second target's 200. You guys want to see something that's really cool though? Is the KISS plan says your first stop movement, and I love this. This is me bragging a little bit about how good the methodology is. Your KISS plan says that your first stop movement is behind a reversal bar in the direction of your trade. Our entry was so stinking good. We were $100 in the good before we ever even got a reversal bar. The KISS plan says go break even after $100. The KISS plan says get paid at $200. The KISS plan gives you the opportunity to know where your stops go and to take a $300 trade. And did you guys know that a $300 trade times the 252 trading days in a year is approximately $75,000 a year, give or take? Now, if you're not currently making $75,000 a year with your trading, does it make sense to try to not only learn the KISS plan, but to learn how to execute the KISS plan flawlessly, without question, without hesitation, without modification? And then once you figure it out and it becomes easy, my favorite phrase, you will craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, this is not the only way to use the software. Is everybody familiar with the fear of missing out? Has anyone ever heard that phrase before? The fear of missing out. The fear that the market will go without you. The fear that every tick printed is suddenly not your what do you call it? I can't even talk. Your tick. In believing that the market owes you something that it's not giving. Guys, that trade was all the way back here. Look at what the market did since. Let's see if this was a trade too. Holy shit. Pulled right back to an area inside of triggers. I've already given Wayne all his feedback, Trina. He's good. We've already talked through it. So guys, if you didn't catch the first one, maybe you got the second one. That was still probably a $300 trade. So when people tell me, Mark, the trade never sets up. Mark, it's not working. Mark, I can't get it done. Chances are you're doing it wrong. So if you are learning this plan, here's what I ask of you, pretty please. Every time you take a trade, go back to those three things. Go back to momentum, go back to path, go back to entry. Write what you saw on the chart and present it in the room and say, Mark, did I read it correctly? Did I follow that KISS plan I told you I want to be held accountable to? And guys, if you did or did not, we'll know. And if you're making mistakes, we'll see them. And you'll be told how to fix it. I won't just go, ha, you messed that one up, and then leave you high and dry. I'll say, here's how you fix it. But if you don't post in my room, if you don't give me that opportunity, you're going to struggle. You're going to make the same mistakes. The market is pushing down. The momentum is strong. There's only 2 triggers through that divergence low, which means if you're following the KISS plan, there is no entry, which means that if you're following the KISS plan, you did not just take a loser. Pretty cool, right? You didn't get high-ticked only to have the market start moving down. Guys, the KISS plan says 3 triggers through, not 2. The KISS plan says the market comes from a termination that reverses the market. Guys, you have a plan that keeps you out of this loser, that eliminates your opinion. Opinions cost money. That's it, guys. That's my first hour. Good job. When I come back, I'm going to click on the charts that I have not clicked on yet. If you are here in the wee hours of the morning, I've already looked at everything that you posted. I've already given you feedback, and I'm not going to go back and revisit them. We're going to go through. We're going to look at what's been posted since that has not received feedback. We're going to talk about advantages, and then we're just going to get to the live market and see if we can't get that simulated money pushed up a little bit more. If you have a question, if you have a chart, post it in the room. I'll see you in 5 minutes. Second half, is it just me? Help me out here. Was that momentum in path and a pullback to an area inside of triggers? Does everybody see it? How cool is that? Hey, Brian17. Yes, I know exactly where he is with it. He sent me a message this morning. And so the profitability side of it and the functionality and everything that we're looking for is using a little bit of what do you call it? Golly, I just drew a blank. Using synthetics and a little bit like we teach in the room, where those large triggers give us the opportunity to get better entries, to have less risk. And I'm looking for a picture for you, Brian. I talked to John Novak a lot. Here we go. So if you go through and you look, one of the profitability things that he's looking at is when the rules are met and when everything is doing what it should do and you get one of those signals, is the initial was getting in at a reversal bar. And he just got the code. He said he hasn't downloaded it yet because he got it in the middle of the night because of where his programmers are. Being able to get in with less risk using the synthetic triggers and lines within it and taking the exact same entries that we talk about every day in the room. And we are literally automating what we just talked about for an hour in here. So Brian, he should have it downloaded today. I should have a copy today, and then we will try to beat the hell out of it for a little bit, and you guys will get it. How was that? Was that a good answer? And the auto system's amazing, isn't it? It really is good enough. The auto system's phenomenal, guys. It does about 90% of the work for you. And it's just, I love it. And if you go over to Traders Chat, you'll see people doing great things with it already. I'm being ugly. So you'll see it. Good stuff. All right, guys. Sorry, I got distracted for a second. Peep that snip. What do you mean peep that snip, Morgan? You kids and your crazy language. I'm going to go up and figure out where I stopped looking at trades this morning. There we go. It was right about there. So Ron C gets to be the first one in on the day. Guys, if you posted something before this and you didn't listen to or get or like, I guess, the feedback you received, feel free to post it again. We'll talk about it more. It's important that you guys realize I am not the trade police, nor do I want to be. And you're going to see a lot of trades that simply don't fit anything that we've talked about. And that's okay. That's your right. It is your right to take trades outside of the KISS plan. It is my right to tell you when you do that you have broken a rule of the KISS plan. And it's all right if you don't care if you broke a rule on the KISS plan. Like, everybody does their own thing. Everybody finds their own way. Everybody's going to write a plan that suits their needs. So even if yours doesn't fit the KISS plan, it doesn't mean that it's the wrong trade. 10K morning, 2 questions. I think there is a free reset on Nexgen funding accounts. No, sir, there is not. That promo is over. It ended last Friday at 4:55 p.m. And this system you just talked about, is it free for the lifetime members? It is definitely money. My brother is probably at least $500,000 deep into creating it. He's going to want to be compensated for that. And I'm not sure. He did a run a lifetime, so if you got in and got one of the lifetimes early, I know Morgan did, congratulations, you'll get the upgrade. But if you didn't, I believe that it may be only available for lease. That's something John Novak is going to have to figure out, and he'll let you guys know. Don't worry. So if you got in on the first round, great. If you didn't get in on the first round, it's either going to be available for lease. If he does lifetimes, I would swoop it up. He's not going to do a lot of them. All right, guys. Momentum, nothing in the way. Well, why didn't you reset it, 10K? The free resets were on Friday. There was a huge message that said it expires. Do you remember seeing that? Hold on. Just so you know that I'm not making stuff up. Ends February 27th at 4:55 p.m. That's when the code ends. So there were free resets. There are no longer free resets. That's like walking into the grocery store 2 days after the sale and saying, well, I didn't need milk when you guys had it on sale. Guys, this is what we call the chili dog. Yeah, no worries, man. This is a trade that Ron created when he understood momentum. This is a trade Ron created when he understood that price typically reacts at these key areas and that they could stop the market. And he said, I don't have time for triggers, even though he had all four through. He lets the back of the price bar get away from the decision-making zone. And when everything is screaming up, he jumps in and jumps out. And it's a really fast trade. It's rooted in momentum and path, and he's making a living off of it. Great trade, Ron. And then Miss Jen, the triggers were up. The path was clear. It pulls all the way back to a mid-band with a close above the small triggers. And you said, you know what? I've got enough room to get paid before I hit something that could create a bounce. And Jen, you do it expertly. Close above the triggers, out at trouble, and it's hard to see, but that is about a $200 trade. Guys, that's the easy one. Great work. And then more of that, all the momentum, room to trouble, jump the fudge in, get away from the bouncy things, ride the momentum down until it's no more. Pete, awesome job on this one. Utilizing the first two concepts. Utilizing those two things that make us all tingly and giggly, momentum and path, and finding a way to turn that into a profitable trading plan. Good job. Momentum and room to trouble, and jumps in, and then it hits trouble, and trouble could have stopped the market cold, right? And Pete, you said, well, I'm going to take it anyway. And I'm going to hold it for an enormous amount of risk and hope that a trend trade directly into trouble doesn't fail. And guys, it's okay. Pete can do that. Pete said, check it out, Mark. Price reached a termination condition and it reversed the market completely. We call that a strong bottom, and a strong bottom is a great indication that the market wants to change direction. And then Pete said to himself, I've got the best look of momentum I could ever hope for on two different charts. That makes me feel good. And I recognize the termination condition, but I make the choice to hold. And then when it retests it, it's interesting that you exited when you could have gotten out at the first one. But guys, you're going to make decisions based on your plan. You're going to make decisions based on what works for you. And Pete did a great chart read and said, I'm willing to hold this trade based on what I see. Nicely done, Pete. I'm not here to tell Pete don't trade into termination conditions. I'm here to talk about how Pete used his ability to read a chart and feel comfortable holding that position. If you're brand new, you're not going to have the brass ones Pete has. How could you? But you get there over time. You write a plan that suits your needs. Triggers are up, room to trouble. There's the pullback to support. There's the close above. There's Trina making money on the easiest trend trade ever. And that's about $240 a contract times 4 contracts. Trina, that's damn near $1,000 trade. Nicely done. It's just a trend trade. And sometimes, oh, don't get excited. Sometimes the triggers are up and you're like, you know what? I'm going to break my rules. I'm feeling invincible. F those rules that make effortless profits. I'm going to hope that this stupid little moving average against strong triggers is enough to make the market magically go up. And Trina, it did. Congratulations. It did. Guys, breaking your rules, why have rules? Why have rules if you're going to break rules? So Trina, you made a decision, stand by it, right? But why bother having a plan if you're not going to follow it? Why bother embracing an edge if you're not going to use it, right? If you want to trade emotionally, throw that plan out the window. You don't need that nonsense holding you back. Everything was up, pulls back to the area, closes above and goes. It seems like your trend trade works amazing, right? So Trina, if you were, no, you don't get to get away with that one. Trina, what are your small chart rules for entry? Have they changed? Buy or sell a pullback at a 1 minute area, zone 1-to-1 or mid-band, right? They're consistent. They haven't changed since day one. If you were really focused on the small chart, you would have said, shit, I don't have an area to trade from. Outer bands aren't on my list, right? Correct me if I'm wrong. Please correct me if I'm wrong. So, guys, you're going to do it. We all do it. Trina, I'm not beating you up. I do it. There's times where I take a trade and I'm like, God, that didn't fit my plan. And I get paid on it, right? And Trina, what you did, and let me scroll back up because I accidentally closed it out. I want to celebrate something. Trina, you took the time to say broke my rules. Now here's the challenge, Trina. Are you willing to say I broke my rules, got lucky, maybe I shouldn't do it again? Or is your brain saying, oh, I broke my rules, I got lucky, fudge, I can't wait to do that every time? That's the only reason I pointed out. You can't gauge your advantage if you can't go back and prove that trading from an outer band against strong triggers on the weak side of triggers is a recipe for success. That's the one that you seem to be killing it with. Good stuff, Miss Trina. Thank you for sharing. Guys, that's about as mean as I get. There's no strongly worded emails. There's not a lot of it. It's just, hey, do you need to break your rules to find this success? Most of us, when we start breaking our rules, that's when we start losing the success that we found. And guys, I'm raising my hand all the way up to the ceiling here. When we start breaking the rules that are making great things happen for us, great things magically seem to stop happening. It's weird. Maybe not on the first run, but long term. Jen, triggers down, all the room in the world. And guys, this is one that you can't really see after the fact. Jen had strong triggers, let the area break. Well, the price broke below it. And when it pulled back, she took a momentum style look right down to trouble. This is nicely done, Jen. I know it looked completely different when it was trading live than it does after the fact. After the fact, you're like, oh, it never broke, it never broke. And when it comes down and pulls back, it's the perfect momentum trade. You did a wonderful job of it. And there we go again. Strong triggers, nothing in the way. Jump the fudge in, jump the fudge out. Let's make some money. Base hits pay bills. Oh, chili dog. And then Miss Adriana. Is this Adriana or Sergio? I don't even know. You guys are so stinking good at this. Triggers are up. Pulls back to the areas, closes above, and there's the money. Fantastic. Fantastic. Brian 17 says, I've been hearing the same thing since May. Sometimes I need to come back and hear it again. Over time, I can get sloppy. You're like a trainer who helps us focus on technique. Thank you. You're very welcome. And Brian, you're absolutely right. It never hurts to hear it again. And I have. I've been saying the same thing for 6 years. Did you guys know that, and I love showing this picture for those of you that have never seen it. I've been saying the same thing for 6 years. Nexgen's been saying the same thing. This is on the 2004 plan. Define a trend, wait for the fight, enter where the fight is most likely to be lost, and write it down. And guys, that's 22 years old. And it's everything that Trina just showed you. It's everything that Adriana just showed you. It's the same method, and it's the same method because it works. So Brian, I'm glad when you guys come back. I think we all need a refresher every now and then. Triggers turned down, room to trouble, waited for the bar to pass the 1-to-1s. There's the close below. There's the entry. There she is getting out, making a little money before it gets to those 1-to-1s. Trend trades work, guys. Everything says up, nothing in the way. 8 seconds. It's a rodeo trade. I love that, Rod. When you believe in momentum and path, it's pretty crazy what you can come up with. And when you have a weak bottom and only 2 triggers through and the gap theory, and you get in and hope that it works, and you keep watching the market push lower and you still hope that it works, and then you sit through 5 minutes of everything turning against you and finally get paid. Whew. Dodge a bullet, Pete. Playing Matrix over here. Only 2 triggers, weak bottom, gap theory. And you say, man, I sure as hell hope that fib holds. And it did for you. Congratulations. I don't think that's patience, man. I don't think that's patience. I think you had so many indications that that trade was more likely to fail than win. 2 triggers, weak bottom, divergence, pivot stop out at 1-to-1, smalls below the large. Hell, smalls below the large and getting below the fib. And you just hold it. And I don't know if that's a patience trade. I think you got lucky. And I love it because you're a wonderful human being. And every now and then, I just want to see you guys get lucky. All right, who am I looking at here? Marika? Is that right? Are you with me, Miss Marika? Cool. So the momentum is up and the path is clear. First 2 rules are rock solid. The only challenge on this trade, Marika, and I want you to see this. The only challenge on this trade is that your area was not inside of the triggers, which means, Marika, it could have been that midband that held. It could have been that fib that held. It could have been this fib that held. It could have even been this midband that ultimately held. Does that make sense? So once you get to the wrong side of those triggers, you're inserting just a little bit of hope. You actually entered right where a stop belongs and hoped that it held. And it did this time, right? And then great job getting paid on the way up. And guys, this is Marika's trade. Marika can take a trade from the wrong side of the triggers if she wants. But if you post it in my room, we're going to talk about how rule number 3 wasn't helping so much there. It wasn't helping at all there. Nice trade. Great profits. Sergio, we saw that one. And then triggers up here. No momentum. And then Marika, this is you again, right? When your triggers are doing this, there's challenges. When your triggers are doing this, you need to right-click and refresh. So, Marika, will you correct me if I'm wrong on this one? I want to show you what I see. I see no momentum because the synthetic triggers are down. I see no clear path because price reached Fibonacci resistance and the triggers didn't even come close. I actually see no clear path because the large triggers are a full bar away and they reach the mid-band. And you did have an entry area. Do you see how 66% of the things that we hold dear were missing from this trade? You may as well have not traded with a large chart on this one. And this is the market. Just giving you a couple bucks, hoping you do this every day for the rest of your life so they can take all your money. Does that make sense, Marika? Now here's the flip side. If you're gonna take this trade, it's all right to take 2 off at trouble. Like, it's okay to get paid there. You don't have to hold break even. Like, if you're gonna break all the rules of the KISS plan here, you don't have to suddenly follow them for management here, because those rules in the KISS plan, guys, are designed to be used with the proper entry. Good job, Marika. And then you do the easy one. All the momentum, nothing in the way, pull back to the area, and it's effortless, right? And it was fast, and it was smooth, and there was no fear because every advantage was there. But Marika, please right-click on your chart and refresh historical data, and let's get these trigger lines back where they belong. Great job, great lessons. I hope they all made sense. Nicely done. Uptrend. I love this. There's the fight. There's the close above. And there's the money in Lucy's wallet. Guys, I'm starting to see this more and more where you guys start throwing trend, fight, and you're waiting for that pattern. Lucy, great job. Now that you've gotten your one loser out of the way, right? All right, triggers down. There's the fight back to the area. There's the close below. Stop behind the down bar that you got in on, okay? And then you get paid. Lucy, great job. Week and a half in, 2 weeks in. Already in line with the pattern. All right, and then Marika, once again, no momentum, directly into trouble, just hoping stuff works out for you. And it did again. Marika, you are dodging bullets, but give me a why if you understand that you had no momentum. And you said triggers started to roll all 3 backgrounds the same. So background is just a color and has nothing to do with a trade. Momentum, the way you had it here, drives a market. Nothing in the way. Make sure that all that momentum has somewhere to go. Marika, do you see what the market did off of this Fibonacci area right here? And just cratered down? That exact same thing could have very easily happened right here. So when you're taking these trades into all that trouble, you're getting away with a few today. And guys, good things for good people. It always makes me happy. But that's not going to produce a lot of longevity typically in the markets. Morgan, all the momentum, clear path. That's the system, guys. Looks like everything we teach, doesn't it? 90% of the heavy lifting done. Great job, Morgan. And it looks like it got you in over here long too. Just one after another this morning. And then Morgan, the one thing that you can do, because I know you're watching it, you get the third divergence, like it's okay to exit, right? Like you can take these amazing entries and throw just a little bit of your smarts on it with management. Make great things happen. Good job, dude. Chili dog again. I don't usually go blasting through divergence, but the market is rocking. The voice literally interrupted herself to say target filled before I could blink. Really fast base hit. I think I'll switch to sim and have some fun. Consistency, guys. The strongest traders in the room doing the exact same thing. Uh-oh, who was this? Help me out, guys. Who is this? Because there's things that need fixing, and I need to know who this is. You guys are going to make me go back and search and find it, huh? Wasn't Sergio. All right, this was Marika. Awesome. Thanks, Marika. So the first thing, you didn't show me this one, did you? You didn't show me that giant loser where you traded directly into resistance without momentum. I told you that was going to run out eventually, right? And it did. So much so that it pissed you off and you didn't share it in the room. Or I missed it, in which case I apologize. All the momentum, nothing in the way. And Marika, this is not jump the fudge in. This is a pullback to an area inside of triggers. This is the best, sexiest trend trade you could ever take. And guys, if you're going to latch on to other people's language, make sure you know what it means. That's not jumping the fudge in. That is the perfect trend trade. That is every advantage on the table. That is the greatest looking entry that you could ever hope for. Great job, Marika. How easy was it to get paid when your large chart looked like this? How hard was it to get paid when it looked like this? Guys, as you go through Simulator, as you practice these trades, you've got to do that. You've got to say, gosh, this sucked. Didn't do anything, right? Well, why did it? Why did I feel so horrible at the end of that trade? Let me go back to the three things that create the perfect trade. Did I have momentum? Boy, I didn't. Did I have a clear path? No way. And then Marika, there's no doubt in my mind you didn't have an area inside of triggers because you're 7 days below those triggers, which means every rule is broken. Does that make sense? And I know that this is not the trade that you wanted to talk about, but these are the things that drain accounts. These are the things that keep these amazing trades and to take such a beautiful $300 trade and still be down $140, Marika, wouldn't it be awesome to be up 600 from your kick-ass trend trades that you took today instead of fighting to get back to positive equity? Guys, that's one of the things that trading and trading a plan does for you, right? Because, and I'm going to show an example real quick, and I hope you guys just bear with me and have fun with me on this one. Actually, you know what? We'll do this. If I take this trade without momentum and I lose $300, no, and Marika, you're doing great by posting in the room and having these conversations. If I take this trade with only 2 triggers through and lose $100, if I take this trade directly into a termination condition and lose $300, if I take this trade directly into a termination condition and lose $300, guys, I'm down $1,000. I have to make $1,000 back before I'm ever break even. So what happens if you start believing that weak triggers produce more losers than winners? And what happens if you start believing that only 2 triggers isn't your best look? And what happens if you start believing that you don't have to trade into termination conditions? And what happens when you start to believe that if you just wait for the absolute best trades, you've got a higher chance, right? And that's kind of what we do in the room, guys. Do whatever you want. It's your right. I'm not here to tell you how to live your life. But there's an easy way to get to where you want to be, and there's a difficult way to get to where you want to be. And the easy way is first of all, don't hide losers, guys. I see them. I see them. You can't take a $300 trade and be down $140. The math doesn't work. Post everything. That's an HVA line, Sergio. When this breakout bar, the white bar down, breaks out, and it is confirmed by another down bar that closes lower, this pink line prints, and this pink line is the highest concentration of sellers in that white breakout bar. Need to fix my ATM. It keeps moving. You're lost, but I jump in again because that's my entry. Yeah, set your ATM right. You can't use a 12-tick stop on minute bars. It just won't work. Give it some room and then use the pivots. Good stuff, Serge. Miss Jen. Weak bottom, 2 triggers, no divergence, pull back to the area, out at trouble. Good job, Miss Jen. Little 2 trigger, potential to break trade. Good trade though. Oh, I'm sorry, I was answering the questions. Pull back, close below. So the only challenge with this, Sergio, the only challenge with it is those pink 1-to-1s are there, those yellow 1-to-1s are there, and they're still behaving as support when you jump in. This is what we call a prairie dog trade. Because price broke above everything. These are 100% support. So if you take that trade below, you're hoping these areas, you're hoping that next bar doesn't spike up. Does that make sense? With the push down, you're hoping that it doesn't do that. Does that make sense? Good? Cool. And look how it happened there. So you got away with it. You got away with it. That's cool, right? Will you get away with it more than you don't? That's the question. Chances are no. Saw that one. There we go, Marika. All the momentum. At least 2 triggers through. Pulls back to the area inside of triggers. And off you go. That potential to break is all the difference in the world, my dear. Great job. Great job, Marika. You guys are so darn smart. Making me all proud and stuff. Fewest moving parts. As taken in the room, which is the right close on the right side, arrow 1 or arrow 2. I'm not sure what you're talking about here, 10K. Are you looking for a long trade? Are you taking a short trade? I don't know that this was taken in the room. I'm not sure which direction you're going. I'm assuming you're going long. Is that right? So everything says down, and you went long directly into resistance. 475. I don't have any rules for this trade. This is a trade that I just don't have rules for. You don't even have large triggers to identify a loss of momentum at the area. If anything, it would be that pullback to the green line. Might fit an HVA trade. So I'm not sure. And I don't know what that means. It's taken in the room. As soon as you signed up for the funding company 10K, you got on the list. So you should be in. Which, I don't know which room you're talking about. Is it not this room? You posted it in a different room? This isn't the one that you posted? I'm so confused right now. Did I miss one of your pictures? No worries. We're going to go enjoy the Nathan show for a minute. This is how you get where you want to be, guys. Post and question, post and question, post and question. Mark, this is what I did. This is what I saw. This is where I did it. Whoops. Does it fit the rules? Am I doing it right? And for those of you wondering, Nathan is hoping to be held accountable to the KISS plan. And because of that, that's exactly what we'll do. Give me a second to make sure we get all of them. I love this. This is how you get good at trading, my friends. Mark, here is every trade. Let's talk about it. Here is all of them. Let's talk about it. Sergio, will you repost it for me? I'm sorry, dude. Do you have time to stick around? Is that it? Here, since I missed you, let me get it real quick. Strong triggers in room. Just jump in, right? Hope for the best. That's all it is. There is no close below. So, Sergio, what's the pattern, brother? Trend, fight, trend, right? That's the pattern every time. Where's your fight? Trend, fight, trend. Missing the fight, brother. But when everything is screaming down, that's what we call the jump the fudge in trade. That's where you're just like, man, I sure hope it goes down. So your pattern, with all of this momentum, with nothing in the way, with everything screaming, Sergio, see that green bar? That's the fight. Awesome. Have fun with those termination conditions. I love bouncy things. That's the fight. That's as close to a fight as you got. That's a little pattern there that maybe you can use. All right, Nathan. Flat triggers only applies to large. Yes. Did you see that you went short with the gap theory? Oh, no, it didn't reach yet. So there's your trend trade. You make money. So what rules? Strong triggers, colors match, space between, mid-band's not a termination condition, pull back to the area inside of triggers, market doesn't go where the market shouldn't go. Oh, is that one an entry area? Looks like it. Looks like it fits the rules, right? So Nathan, how do we know? Instead of rules met, why don't we write the rules out? Strong triggers, clear path, area inside of triggers. You tell me, are the rules met? Yes. That's how easy it is. If you're not sure if your rules are met, write your rules on the chart. No, that's not three divergences. That one is history. Gone. Not printing. You've got momentum. You've got path. You've got entry. You're good. After this divergence, man, it went way up. See how it quits printing? You're good. And look at that. Never goes where the market shouldn't, right? And then the third divergence shows up. Great trade. Great hold. Great stops. Way to get paid and out break even. Nicely done. Momentum and path pulls back to the area and they gotcha. And that's it. Sometimes the market wants to push a little further. Does trading in the same price range affect results? How about does breaking my rules? Stop nitpicking, Nathan. Has nothing to do with your plan. Momentum path. There's your entry. Not third divergence as triggers have passed through the 54%. Yep. Takes it off, so it's only 2. That's your third. Price it, break even. Nicely done. Why didn't you take it? Why is it just circles? Momentum and path, pull back win, pull back win, pull back lose. 66%. Good job. Good job. First one was 3 triggers through. Next 2 were 4 triggers through. Perfect. No divergence. You didn't have strong triggers. And then that divergence doesn't affect it once it's 4 through. Good job, Nathan. Perfect. Not per the KISS plan. One-to-ones have been there for an hour. Not safe to assume. 4 for 4. I like that. You made a judgment call. You made a judgment call. And you said, I'm 1 bar out, right? Context. Great job, Nathan. You didn't overthink it. You just said, hey, that was only 3 triggers through until 38 seconds ago. Good job. Odds favorable, 4 triggers, perfect entry, easy money. Easy money. 4 triggers, perfect entry, didn't work. And then what is it from a weak bottom, Nathan? You followed the KISS plan perfect. Midband's got a good shot of holding though, right? But everything's perfect. Nicely done. Dude, you are following your plan to the letter. Missed your stop by a tick. 4 triggers, room to trouble, perfect entry, doesn't hit the stop. And look at that. Stop keeps you in place all the way down to both targets. Great job, dude. Great job. Gap theory still tripping me up. When price hits a midband, triggers are more than a full bar away. But as everything rolls, the large gets close to the midband. Is it a strong top? It is a strong top because the midband was a termination. And then when it reverses, termination reverses the market. That's it, right? It's all in the language. When is the midband a termination? When the large triggers are a full bar away. What happens if a termination reverses the market? It produces a strong top. No, who cares if it moves up? Good job, dude. Odds favorable, clear path, perfect entry, didn't work. It happens. It happens. Consistency, dude, you're crushing it. Midband is a term, 100% here, and when we get here, it's not. But it's only 2 triggers through the divergence low. 100% a termination here. 953, 953, 100% a termination. Look at it close that gap. You see it? And it did. It closed that gap big time. I like that the previous picture was gap theories tripping me up. So every time I see a midband, I'm looking for those large triggers. Good job, dude. Price reaches an area, the midband. I don't care how far it goes. If the large triggers don't follow, it's a termination. The same way, Nathan, hold on, let me see if we can find a picture. The same way, I don't care that price got so far away from these one-to-ones. I never got 3 triggers through, right? I don't care that price got so far below. So yeah, great stuff, dude. Gap theory gotcha. Did you get that one? That was that one where I was like, man, some people are going to catch that and some people won't. It all depends on where the entry was. That's such a good look. Odds favorable, clear path. Oh, it got one of them. Right on. Perfect trade. $300. There's the second one. Perfect trade. Those are the easy ones, aren't they? Those are the ones that you're just like, oh my God, I can make a living off of these. Momentum and path, pull back to the area. Easy trades, easy money. Easy money. 3 out of 4, strong top, no divergence, perfect entry. Oh, they did you dirty. They gave you $100 and then said, Nathan, that's it for you. No more. So, Nathan, what do you see about where your exit was? With this look, it's right at the area inside of triggers, right? Just a growth point. Don't you dare change your plan unless you want to. But you'll begin to feel these out a little bit. And you'll say, you know what, I got paid. I'll keep a couple ticks because it's just the perfect trade twice. Great job, dude. Killing it. Catch it at the low end. Perfect stops. Money, money. Man, you got skills, brother. Guys, that was the KISS plan. That was the KISS plan. Man, Paul, he reminds me of a young you. A younger, better looking you. So Nathan, what kind of percentage are you working with now? Have you done the math? What sort of win percentage are you looking at? Doing nothing but KISS plan 100%. And I'm going to open up a couple pictures while you do that. There's Boaz, there's 10K, Piney Ski. 70%. Are you really? So guys, listen. Nathan has been 100% dedicated to following the KISS plan 100% verbatim without deviation, and he's at 70% winners. Fantastic. Now, are you 70% winners in the money or 70% winners down money? And I'm asking not to make a point in the room. I'm genuinely, you're up money at 70%. All right. So there may be something to this KISS plan. Termination. White bar breakout. Triggers are in the wrong position, Phil. Does that make sense? Triggers are in the wrong position, and from your entry, you have absolutely no room to trouble. Does that make sense, Phil? Not beating you up, not telling you what to do. But if you're really trying to stick to rules, you just didn't have them met. There's not room. Oh, yeah, okay, I'm sorry. Well, you're pointing to this bar. They're trying to. They're working their way. But from 08 to 0850, is that enough room? It is probably because you've got the small triggers going up. Right on, just a little late. It works. The nice thing about this is that the triggers are already up, right? They're just retesting. So you're actually trading with the trend from a termination using the pattern. I like that. Good stuff. All the momentum, nothing in the way. Giddy up. All right, Marika. Left early after long down take. I don't know what we're doing. Is this 10K? Is this you 10K? I can't see what you're doing on this chart. Who is this? So the entry's at 1030, but I can't see 1030 over here, nor can I see 1030 over here. But with the small triggers, maybe there was a termination condition here. You bet, Phil. Say hi to Oklahoma for me. Boaz. There's your white bar, small triggers. There's your entry. And yeah, you didn't hit anything solid. Didn't hit anything solid, but that's the exact same pattern Phil took. And you know that bottom's good when they give you one of those. And then there's nothing wrong with getting paid, though. I mean, you're in at 81 and out at, I can't tell, I can't read those, but it looks like it's at least in the 30 range. That's beautiful. That's an awesome catching it. I can't see the other two charts, but that is the pattern. Nicely done. Triggers are flat, but blue. Weak side. Pull back to the area. Close above. Out of trouble. This is what I'm asking. Arrow 1 is right side close or arrow 2 is right side close? Both. Both are closes above the triggers, Pablo. The first one is an up bar from the area that closes above. The second one is the same. So Phil, there's a pretty good look at yours too. And Boaz, that's yours too, right? This is really just kind of a trend trade. Good stuff. Nice one, Pablo. This is you, 10K? Not Pablo? Oh, right on. Yeah, that's a close above. That's also a close above. So he's saying his triggers are up. He's got room to trouble. It pulls back to an area. There's the close above. There's another close above. You bet, Cab. Have a good one. And then he's out at trouble. Great stuff. And does that clear up what you were wondering, 10K? You had the same trade, right? But I couldn't see what was going on over here. And you've got a little different zone look. But it's the same concept. Yeah, okay, cool. Sometimes I need help. And then Paul, everything says down. Looks beautiful. Pulls back. Always take the highest, best entry to prevent frustration and pain. Better to miss a trade than to be frustrated trade. I love it. And you got in on the way down, Paul. Is that a system entry? Is that the coming back, waiting for the down bar gets you in? Or is that just a Paul entry? I like it. Let it get back in direction, right? Good stuff. Good stuff. Paul entry. Paul's got good entries. For you guys that don't know the legend of Paul, he showed up when this classroom was nothing but 101 in the afternoons, and probably, 3 months worth of replay, asking questions on every picture. And now you're just crushing it, dude. I love it. I have fun watching you post in the other room. You've gotten so stinking good at this. Nicely done. Triggers are up. Weak side. Pulls back to the area. So there's the first close above. And then 10K, this answers it even better, right? So Trina, here's your trade right there. In at 90. And you catch the same entry. Target's made. Really nicely done. I like it. There's like 4 of you taking the exact same trade. Great job, everybody. Great job. 2 triggers through. Divergence. Avoidable loser. I love that. Triggers are down. That was your trend trade up here. Probably right there, and just down it goes. Tail into momentum. No areas inside of triggers. Miss Trina, have a great afternoon. Great trading today. No separation. Rule number 1 not met. Clear path. Rule number 2 met. No area inside of triggers. Rule number 3 not met. 2 out of 3 gone, guys. That's low probability. So I'm going to walk away and I'm going to take a drink. And if you're one of the 5 messages, guys, I'll get you after class. I try not to take away from class. These triggers are down. It's pretty tight to the outer band. There's your pullback to resistance, but you haven't had a close below the triggers yet. Does that make sense? Trend is down. Room to trouble. Here's your pullback. If this area turns into support, it'll have to be up here. So we'll see if it sets up. All right, guys, I'll be back in, I don't know, a few minutes. Go refill my water and check on my dog. Stretch your legs. You too, Alex. Take care, man. Just waiting for a close below, right? If we were going to go short, we need a little downward push real quick. And if we don't get it, no worries. It's just not our money. That's one of the great things about this methodology, is that there is such a patience that comes from having to have a close below the small triggers. Like, it's just not even a, oh, I hope it happens. It's like, I'm just looking at a timer. 2, 1, boom, didn't happen, not my money. I love it. And Don, if you need any help, man, don't hesitate. I'm trying to give you like nothing to think about. So have a great afternoon. Guys, I can't say it too many times. If you need help, ask. I got you. That's what I'm here for. I love it. All right, we got 40 seconds to think about it, don't we? 40 seconds. And I definitely have to have the close below that zone, because if I don't, then I don't have room. 24 seconds. Let's see what happens. 17 seconds. 16, 15, 14. How we feeling, guys? Triggers down. With a close below, I definitely have room to trouble. The only thing I don't have is a close below. Bonk, that's it. Stop would have to go above the pivot high. $3,600 worth. That's a lot. And because this is resistance, I'm not trading into resistance. Ooh, nope, and I'm in the zone though. I messed up. Guys, I made a mistake. I took the trade in the wrong spot. Boom, and they just took me out. So watch this. What a good lesson. This is how I would annotate this one. Because my large chart was inside of that zone, I had no room to trouble. Should have never taken the entry. This room is for educational purposes. And all trades shown are for that. And I am not in any way, shape, or form telling you what to do. There's a lesson. You have to have room. We even drew the line, right? That's avoidable losses, guys. That's how it happens. I did it. I made a mistake live in front of everybody. And look what the market did. When the rules aren't met, you're more likely to lose than win. That's all we're saying. 2 triggers through. Man, it looks like there was another one. Are you guys trading crude oil today? I mean, holy wow. Holy wow. They are putting on a clinic, aren't they? Guys, we're done. We got all the pictures. We've talked about them. I'm just going to keep cruising through the live market. If we find some rules met, well, there's the one that we took, right? Look perfect over here. And guess what? Sometimes great trades lose. Sometimes outstanding trades don't go the distance. There's 26 of you in here, guys. Either post them, ask a question, let me know what you need. I'm going to mute. I'm going to mute. I'm going to kill